Hi, JJ here with The Art of Value. In a recent Q&A session with the Asian Institute of Technology, Mohnish Pabrai shared the story of the investing career of Indian investor Rakesh Jhunjhunwala. Rakesh was one of the best investors of all time in India, in fact in the whole world, and he died recently at the age of 62. In this brief episode, I'm going to share what Mohnish said about Rakesh's investing and distill it down to 4 important points. So hopefully we can apply it to our own investing and have similar success to Rakesh perhaps. Even though he was only 62 when he died, Rakesh amassed $4 billion in net worth, and it was all from the markets. He never managed outside money, and he invested over 4 decades, compounding at a high rate over that time. Many people in Western countries don't even know who he is. I mean, I admit I didn't know until Mohnish brought it up in this talk, so I'm grateful to Mohnish for providing some information about this great investor. Pabrai didn't know Rakesh, but he says he has friends who did know him. Rakesh started as a chartered accountant, and as it's often said, accounting is the language of investing. Rakesh started with nothing. All of his net worth was made from the market. In fact, he started only with $25,000 loan. He borrowed the money to start investing. It was at an interest rate of 18%, which seems incredibly high to us these days, even though interest rates are currently going up. But this was back in the 1980s. So a normal rate was about 12 to 13%. So it was higher than the normal rate, but that's how he started. He borrowed the money to start. Now, borrowing money to invest, especially at the beginning, is definitely not recommended. I don't think Mohnish would recommend that, and I certainly don't. It's not investment advice. It's not the first time I've heard of it, though. I've heard of Li Lu. If you know Li Lu, the famous investor, one of the best investors in the world, it's said, it's kind of legendary that when he was at Columbia Business School, he took his student loan money before he needed it and invested that and made money. So he actually made a lot of money while he was an investing student, and left university with a lot of money by using the knowledge to invest while he was learning how to invest and making money from it. Pretty amazing, but not recommended. I wouldn't recommend that, and I would not do that myself. Mohnish said Rakesh was a bit of a split brain in the sense that he did a lot of trading, even day trading, to keep his mind occupied, Mohnish thinks. But really, and this is the first important point, is that he held a few stocks for a long time, decades. And that was where his wealth came from. That's how he generated the wealth over time, not from the trading, but for holding stocks for a long time. Rakesh was able to compound his net worth from that initial $25,000 over 40 years at 30% a year, compounding for 30% a year. That's amazing. And so this is the second important point. He held for a long time a few companies, even though he traded, but they were high quality companies, compounding for a long time. Mohnish shares the names and details of some of the high quality companies that Rakesh owned and held for a long time, and gives a breakdown of just why they were such great multi-baggers over a long period of time. At this point, if you're enjoying this episode, I'd just like to ask you, if you're on YouTube, to tap that like button to help with the YouTube algo and help the channel grow. Thank you. So as an example of these quality companies, Mohnish said that Rakesh 25 to 30 years ago invested in a company called Titan, which is a jewelry manufacturer and retailer, the most trusted name in India. So he put about 4% of his net worth into Titan that long ago, and over time it grew to 50% of his portfolio. He never touched it, and it grew from 4% to 50%. And Mohnish thinks it's still got a long runway of growth ahead, perhaps for 50 years, he said. That's not investment advice. He doesn't own the stock that I know of, but he just thinks it's still got a long runway for growth. So it was a quality company, a trusted name in the industry, and he just bought it and never touched it for that long, and it compounded at 30 to 35% a year. So there are other long-term names in his portfolio that did very well too. He did, as Pabrai said, he did a lot of rapid-fire trading daily, and Pabrai thinks he did that to keep his mind occupied. Maybe it helped him not touch those other stocks for decades. So this is the third important point. The company, Titan, went through a lot of ups and downs over the way, but he didn't sell. He just held on to it, and he wasn't concerned because he understood the company. Understanding the company is really important. Warren Buffett has always said that. if a company's in your circle of competence and you learn a lot about it, you understand it, then when the volatility happens, and it does happen, look at companies like Amazon, which went down over 90% during the dot-com bubble. But if you understand the company, you're able to withstand that and just hold it long term. That's what he did. The fourth important point is that he wasn't bothered when it became a big percentage of his portfolio. He didn't rebalance, didn't sell some, he just kept it. Even when it was 50% of his portfolio, he was okay to keep it over that time. So Charlie Munger does the same. He's known for a similar thing where companies have become big parts of his portfolio. Costco, for instance, he said he wouldn't buy it at a high price if it gets overvalued, but he wouldn't sell it either. So the important point here is that he didn't sell it even when it became overvalued. When he knew it was overvalued, way above intrinsic value, he just kept it even then, didn't sell any. So Mohnish says that the other company that was a big gainer for Rakesh was a pharmaceutical company called Lupin, which compounded at 25 to 30% as well. That's the other company that he held long term that did very well. There's a third company that Mohnish said that Rakesh sold and he regretted selling. It was the credit ratings agency in India, the best one, Crystal I think it's called, and he regretted selling it. He should have kept it for longer. He did make a few times his money, but he always regretted selling it. I think there's a lesson there for us as well. There were two that did very well, but he could have had a third huge one. Mohnish says that some of the holy grail of investing that he's figured out so far on the time that he's been investing and through Rakesh as well is that hold quality businesses for a very long time. So to do that, you've got to understand them and hold them and not sell them even if they become overvalued. He didn't used to invest like that. He used to invest in the Ben Graham way where they got to intrinsic value and then he sold them, but now he's more into compounding and holding businesses that he understands for a very long time, even if they get overvalued. So that's what this channel is all about. If you like that, if you think you learned something from that, got value out of that, please consider subscribing to the channel because there'll be more of that in the future. So Mohnish says that the businesses we own must have the qualities that allow it to compound intrinsic value for a long time, like the businesses that Rakesh owned. He says there are a number of different ways to invest, but the way that Rakesh did it, holding those long-term compounders, is the way to go. So Mohnish says to buy partial ownership in great businesses with tremendous economics and a long runway for growth, like Rakesh did. This way, you only need to be right once or twice in a lifetime, like Rakesh, to do incredibly well. I've made other videos about the way Mohnish invests and what he thinks is the best way to find these great companies. I'll leave a link in the description, and if you're on YouTube, also there'll be a link at the end of the video. Hope you got some value out of that. I did, finding out about Rakesh Jhunjhunwala and what Mohnish thinks about his investing. And there'll be more like this in the future, so consider subscribing, or if you're on another podcast player, subscribe and follow, whatever it allows you to do. And I'll see you next time.